What's going on, YouTube? It's Tunde back here again, and here with another educational video for you. And today we're going to be talking about market structure. Market structure is probably the most important thing that you're going to need to learn from a technical point of view in trading. You must understand market structure. You have to. There's really no way around it. And it's actually what I've noticed. One of the things that many traders do not want to take the time to understand, and primarily because it has to do with a lot of chart time, and that requires a lot of patience. And a lot of people just don't want to sit down and take the time to learn it because most people are just trying to find a quick YouTube strategy that is going to take them to, all the profits in the world. It just doesn't really work like that, right? You're going to need to understand and essentially master market structure. Trying to skip over market structure and jump straight to a profitable strategy is kind of like wanting to become a doctor but not going to medical school. It doesn't really work. It doesn't work. It's never going to work in the real world, and it's not going to work in the world of day trading. So let's go over market structure. Let's hop to the charts. All right, so let's go over this thing called market structure. I know you've heard it before, but let's go over how you need to be able to identify what's going on in the market, or what's going on with price based on what you see. So as we start here on the daily, you can see that the NASDAQ is clearly on an uptrend, right? Clearly on an uptrend. But why is it in an uptrend? What defines an uptrend? Well, it's real simple. When you have a level of resistance that's been broken with a strong candle or strong candles, that's how you know you're in an uptrend. When you've got a major level, or even, essentially major level that's been broken, right? And on the daily, you have this nice big candle that broke market structure. We call that a break. We call that a break of structure. That's where you define. That's how you continuously define what trend you're in. Whether you're in an uptrend, if you're in a downtrend, you're going to be able to notice that by the direction that you're having breaks of structure. Okay, so if we go down to the 4-hour, we're basically just going to continue to identify market structure breaks or break of structure, right? So what we see is we also have this more minor level of structure broken, right, along with the daily. So that's what you want to do. You want to go from one time frame to the next and just continue to try to identify the same thing on the lower time level. That's what we call multi-time frame analysis, right? So then what do we see now? We see this level of structure broken, and then it came back to retest it and pull up. And then what happens? This level of structure was now broken, and then now we have more minor levels of structure broken as we continue to move up. So what do? We go to the lower time frame, and let's just pretend that this isn't here. That hasn't happened yet, right? So then we go down to the 1 hour, and now we can see that we've got more minor levels of structure that have been broken. So for now, while you're looking at it, you are still in an uptrend, right? Because what have we done? We've broken market structure. We've broken this structure. This is called a structure. right? And that's what you need to be able to understand. This structure has now been broken. So for now, we're still in an uptrend. So when you want to take trades, you need to know what direction the market is trying to head in so that you can make the best decision, essentially, right? So if we go to the lower time frame, you see what's next. Well, let's play it out. All right. So now we got this big red candle, right? We've got this big red candle, and what's happened? Well, we've got a little level of structure that's been broken, right? So what does that mean? Does that mean we're in a downtrend? Well, that means that we are in what you can call an intraday trend, meaning that it may not be the overall trend for the entire day or for the entire week maybe, but for right now, this minor intraday level has been broken. So you may be able to reasonably consider or reasonably say that you can be looking to take sell positions, right? Or shorts, because you have that break of structure, right? So let's keep going and see what happens next. All right, so now we have now come to a structure. We've come to a structure on the 30-minute. And so far it's broken it, but this isn't the structure that is going to define where you're going to head. This is a structure that you may be able to take a trade off of, but it's not the structure that determines which direction the market may go. The structure that determines the break of structure that determines where you're going to go is the largest swing low, and you need to go to the higher time frame. So you may need to go to the 1 hour to see that. You may need to go to the 4 hour to see that. Right now, as you can see on the 4 hour, this still looks like an uptrend, but with a lot of bearish pressure. Right, you see a lot of bearish pressure, and you can kind of see that this 4 hour candle has had a reaction to this level, to this structure, right? So what I would say is we are not in an overall downtrend until we break this level down here, which that's a long way to go. Now that doesn't mean that you can't take sells up until that point. Like I said, you can use these levels to take trades off of, right? You can use these levels to take trades off of, but it doesn't mean that you're in a downtrend yet, but you can still take counter trend trades. All right. So that is essentially how you're going to be looking at market structure and the way to use it, right? The way to use it is you're going to determine where you're at, where the market may be going by the level of structure that has been broken. So right now we've broken this level. And there's reason to think that it can come down to here, to this next level. So that's what I would call a counter trend trade, right? And if we were to break down, I don't think this is the current market. So if we were to come down and break this level, then there's reason to believe that we may come down to this level, potentially this level, right? Just depending on where the market is, or just depending on how strong these levels are. So now I want to help you identify these levels. The way you want to look at these levels and determine what's significant and what isn't is you want to look at the biggest swings and the swings that break the biggest structure. You can anticipate the market to come back to those areas, right? This is obviously an uptrend, a bullish trend market, right? So when you're looking at the market, You can look at this the same way. You can even go do a little trick and come to the line chart. You can come to the line chart, and basically what you want to identify, what you want to identify when you're looking at this is you want to identify where you have the most touches. So here you have one touch here, you have another touch here, and you have another touch here. That will tell you that this is a strong level. This is a strong level, and you need to be paying attention when the market comes to this level. And when it's broken, you can use it to, you can wait for a break and retest, or you can wait for a break of structure, whatever it is, however it is that you want to trade, you can do that. But you want to be paying attention to major structural levels. If you get into looking at too many levels without having enough experience and not being ready to risk the type of risk that you may be taking trading smaller levels, right? Like trading like 5-minute, 15-minute levels, you may find yourself losing more than you want to, right? Like if, for example, I go to the 15 or 5-minute, there are tons of little levels here. There are tons of little levels. But you can keep it simple for yourself and stay on the 1 hour, the 4 hour, and the daily, right? And you can see here, where do you have the most touches? Here. This is the most significant level at this moment. And that's why if we go down the hour, you can see the extra touches. The line chart doesn't consider the wicks, right? So that's why I draw my levels at the bodies of the candles. Okay. Now we go back to the candlestick chart, and we can see that we've broken this level, and now it's come back for a retest, and it looks like it's rejecting, right? A lot of people would consider this a trading opportunity, right? I consider this a trading opportunity. It's just not a good time, right? And this is something where you can either take it down to the low. You can take it down to the low, or something like that. The risk to reward isn't too good. But anyway, that's how you use market structure. And I wanted to use the current market. Where the market is currently at, so that you could use these levels to do your own trading, right? But again, using that line chart can be very key, so that it can help your eyes focus on what's important and not kind of get thrown off by all of the candles and the wicks. Using the line chart can actually be very, very helpful. And you just have to go through the higher time frames. You want to go through all the time frames, so that you can see what makes sense and what doesn't. All right, so that's it for market structure. I just want you guys to remember, focus on the higher time frame. And when I say higher time frame, I mean the 4 hour and the daily. Focus on the higher time frame, and then the mid intraday time frame, like the hour levels, the hour levels that have the most touches for the biggest swings. That's how you essentially identify the biggest structures, right? Because what you want to remember is that the market will generally move like this, and it'll do some of that, but eventually it'll come to the level, have its rejection, and move back up if it's in an uptrend, right? It'll have its reaction if it's in an uptrend, and let me see if I can flip this upside down or something. Downtrend will be the exact same. Not the exact same, obviously. It'll come back down to here. I know you've seen this before, but you have to understand how important this is. It can come back down here and it can do some weirdness, but eventually it'll come back to its level, to the major level with the most touches, right? We can even just say something like that and use it as its primary level to take a trade from, right? That's how you identify market structure, right? I identify market structure by breaking retests, because that's how the market essentially moves. That's how the market moves when you're looking, when we're talking about supply and demand levels, right? So just wanted to give you guys that bit of education. Hopefully it made sense to you. I'm going to be dropping another video very, very quickly, actually, very soon, on support and resistance, which will be a little similar to this, but that'll be on how to, can't talk. That'll be more on how to trade it, how to draw it, and how to trade it. So appreciate you guys for checking out this video. Hopefully you learned something from it. Hopefully you got some value from it. This is the same stuff that I teach in my academy and TSA to my members, my students. But I'm here giving you guys some free information, because that's kind of what YouTube is for. YouTube is for, free education. I got free education, so why not help give some back, right? I didn't get all free education. I definitely had to pay a lot of money over the years, but this is just my my give back to the trading community. So appreciate you guys, and we'll see you later. Peace.